Okay, hello everybody and welcome. My name is Bianca Beck. I am Middle East Marketing Manager for the Sovereign Group. Thank you so much for joining us today for our webinar, Doing Business in the Middle East. So just a couple of ground rules. We are recording the session, so that means that you will have access to this presentation and video when we complete the webinar. We will circulate that all with you. If you have any questions throughout the session, feel free to pop them in the Q&A section or the chat box, and we will be sure to get through as many of them at the end. I would like to just introduce you to our speakers today. We are joined and our presenters today are going to be Nazar Musa, who is our CEO of our Qatar and Saudi Arabia office. James Swallow, who is our commercial director based here in the UAE, but also covers Oman, and Anas Al Adawi, who is our sales director based in Bahrain. So they combined will cover all of the GCC locations that we are based in. And yeah, we hope you find this session to be very informative. Jim, over to you.
Thanks a lot, Bianca. So yes, I mean, there's quite a lot to get through. We're covering the GCC, looking at our offices here across the Middle East. We'll try and get as much detail as we can into each one, but I just wanted to cover the areas where we have operational teams and expertise, offices in Riyadh, in Saudi Arabia, Doha, Dubai, obviously, Oman, Abu Dhabi, Bahrain, ADGM and DIFC and other free zones here in the UAE and in Kuwait. So our operational teams on the ground are very knowledgeable in these particular areas. So depending on your requirements, whether you're already here or whether you're looking to set up or branch into another one of these countries, we can certainly help. We endeavor to make it super easy for you to make an informed decision and make sure the setup is smooth. We have the knowledgeable teams on the ground who are kind of at the coalface in terms of particular sectors and particular areas and locations that you're looking to operate in. And we build strong relationships across the region. So we are always available to make introductions and help you with your business growth post-incorporation. So we'll try and cover most of these areas in as much detail as we can. We wanted to also do a poll during the facility, which gives you the opportunity to kind of tell us the areas that you're interested in this particular slide. So if you could just have a look at the poll and let us know the area in, or indeed that you're looking to move into, just click the button here if you can see the poll that's appeared on this slide. That will give us a good bit of information and also allow us then to potentially do some follow-up with you with specific details on that office, and other polls that will come along later on will give us a bit more information in which sector you're in as well. So if you can have a look at that, I will also answer the poll myself. We will possibly be able to get some results live. Oh, right. So we can see most are focused on the UAE and Saudi Arabia, second place at 24%. So that's probably not a surprise, with a smattering of percentages across the other countries. So again, we'll target, there'll be some fact sheets available and the presentation itself will also be available to you. And we can talk further beyond the presentation about specific locations and what you're looking to achieve there. So if we go on to the next slide, just a real summary of the GCC. Obviously, everyone is probably aware the GCC is common market, common customs union, unified regulations. But as we'll come on to see, very different tax jurisdictions, very different approaches to company formation, the ability to branch, as well as some of the regulations and compliance in each country. So although it is, and we often see, thinking about that poll that we've just seen there, companies using the UAE as a base, going into Saudi Arabia, other GCC countries, is often not as easy. It's quite important that you consider potentially setting up an entity in that country, depending on what you're looking to deliver. So it's a very unified region, very secure. I've lived here myself for over 15 years. And we travel between these countries and we do business and we have operational teams in each one. So we're covering the GCC today. If we go on to the next slide, we'll come on to the sectors. So again, there's a lot of sectors here. We've got Gulf Foods on at the moment here in Dubai. That's why the traffic is horrendous. But obviously that's the tourist and F&B sector, very big here. We've got technology, which is really expanding significantly, particularly in the UAE, but also Saudi Arabia now and Qatar. There's a blueprint for the fund to invest in AI and startups. Virtual asset regulations are coming in here as well. Energy and renewables obviously was a big one. Abu Dhabi oil and gas, Saudi oil and gas, but also renewable, sustainable energy is also a big push in the region. We've also got healthcare, real estate, construction, retail, education. There's a lot going on, whether it's government projects, whether it's construction, or whether it's dealing with the retail market and dealing with people in the UAE or in these free zones that are located in each of these countries. Then it really kind of tailors the way that you'll need to set up. So we can help in terms of having the teams on the ground with the knowledge in each sector. Each sector will often need a particular type of regulatory requirement to set up that particular activity. So it's important that you have a look at what you're looking to achieve, what products you're selling or services, and who your end client is, to then make that decision as to what type of activity you need to have and where you need to establish, because that can be quite an important decision. There's a quick poll on this slide as well, again, just to get a feel for what sector, also to help us potentially give you more tailored information after the presentation. So have a look at this poll. This covers these major sectors here. If any are not in there, you guys could just have a quick look. I'm going to say that I'm in the energy and renewables sector. So we can see there's quite a lot on technology and AI, quite a lot in other. Interesting. Okay, there's not as much in education. Real estate and construction's coming forward. Quite a good spread there across all sectors. So depending on whether you're already set up here, and a lot of companies look to set up a generic activity in the early stages and then potentially do a step into a more regulated activity, particularly if it's something like healthcare or if it's real estate or construction that needs regulatory approvals. So again, we can help if you have any specific requirements to make that step either in the early stages, or you're already here and you're looking to branch into another country, or you're looking to obtain regulatory approvals to undertake a particular project or go for a government tender or something like that. It's quite important to look at that. So we can talk to you beyond this presentation and give you more information on that. So yeah, just quickly on how we work, dedicated point of contact within the Sovereign PPG team. We don't charge for the initial consultation. We have a discussion with you, and really our role is to try and help you develop that knowledge and give you that information onto how to set up. We, in terms of the guidance, we develop a clear step plan based on the information that you've given us and based on a review of your requirements. And then we structure that advice to allow you to deliver that. And then the efficiency of delivery, very swift response times. We're very proactive. We have our operational teams, as I've said, on the ground. We don't outsource that to anyone. So the people that will be dealing with those specific structural concerns are our team that are very experienced in those areas. So we can help you, give you the advice on how to set up. We can help you set up, and then post incorporation, do all the things that you need to do to maintain the operation and maintain compliance with things like, accountancy, tax registration, some of the other requirements, trade license renewals, staffing, visas, that kind of thing. We have operational teams that can help you kind of handle all of those considerations as well. So just a quick summary there of how we work. And moving on to the next slide. So we've got a very good handout here, which Bianca will make available in the chat and is also available after the poll. So the GCC is not a tax-free jurisdiction. Many kind of believe, even in the UAE now we have tax, although Bahrain and Anas, I'm sure, will come on and talk to you about the benefits of the very low tax. But there are a lot of considerations now. The UAE has brought in corporate tax at 9%. The free zones have exemptions, but those exemptions are dependent on you not doing a certain percentage of business in the mainland. And there are other considerations. And there are considerations cross-border between countries. So transfer pricing, for example, doing business in Saudi Arabia. A lot of companies have in the past historically done that from the UAE. That's really not something you can do anymore. Most of the time now, requiring you to set up, hire staff, undertake, Saudization requirements and all the relevant tax registrations that are needed in Saudi Arabia. There is a substance requirement pretty much across the board now for banking in most of these countries. So that's another consideration. And there's a lot of information on this sheet. We'll make this sheet available to you. And as I've said, we have really, we have expertise in all of these areas. So in terms of the finite detail, we can talk about each specific case by case, depending on what your requirements are. And we have a poll on this one as well. We're kind of inundating you with polls. One in terms of what the factors are when you're considering expanding into a new market, whether you're not in the GCC yet and you're thinking about coming here, or you're already and you're thinking about Qatar, Saudi Arabia. What are your main considerations in terms of that? Obviously, there's you would want to look at market demand, but are you also considering regulatory requirements, tax incentives, exemptions, political stability, cost of setup? Just have a look and click that poll for us if you would. That'd be really helpful. I'm going to click tax. Let's have a look. And a lot of other people have clicked tax as well. So clearly, it is a big incentive for a low tax, simplified, possibly based on, we've seen a lot, for example, in the UK. The UK recently has become a lot more complicated and a lot more higher burden of tax, and it's driving a lot of businesses and wealthy individuals to look at other areas such as the GCC. So that's a very interesting poll there. Tax seems to be the dominant one, although cost of setup, market potential as well. Obviously, that has to be there as a prerequisite. So very interesting. So thanks for those responses. As I've said, the tax comparison sheet will be made available. And I'll now pass across very swiftly to Naz for Saudi Arabia. Thank you.
Good afternoon, everybody. I'm Naz Hormuz. I head our teams in Saudi Arabia and in Qatar. In Saudi Arabia, we have an office based in Riyadh that can support you to set up and then through the incorporation process and then post-incorporation as well. There's been a lot of noise around Saudi Arabia in the last few years. As a market, it's the biggest population in the region. Quite interesting. On the last poll, I could see that a lot of you are interested in markets based on their opportunity. Clearly, Saudi Arabia, with the biggest populace, holds great opportunity. On top of that, 65% of the Saudi population is under the age of 35. So there's a longevity in potential and client base there. The kingdom has been really focused on growing its non-oil business activity, which the UAE and other markets in the region have been very, very strong in doing. And they've opened up a lot of new things that allow foreign ownership, that allow international people to move into the kingdom and to drive it away from being a hardship posting to somewhere that people may want to live and grow and grow a career. Obviously, there's been major events with the World Cup a couple of years ago. Recently, FIFA 2034 being announced and Expo 2030, all driven around the 2030 vision that the whole country is focused towards, with new mega projects throughout the kingdom, from the Red Sea developments to NEOM to new King Salman Airport in Saudi Arabia. There's an awful lot of development going on in the kingdom. You can own a business for most activities 100% now. The first stage of that is getting a MISA license, Ministry of Investments for Saudi Arabia license, and we can help you identify that and then take the formation steps post the MISA license to get you started in the kingdom. Next slide. Yeah, so this is how the formation really goes. Look, we've put on there that the MISA license can take 60 to 90 days, which it can. The biggest part of that is how quickly your documentation as a company can be attested in your home country and brought over, etc., etc. If all of that's ready, it can be a matter of days and weeks, not 60 or 90 days. But that is literally the first step. You're going to need a year of audited financial accounts. in the same activity that you want to set up in the kingdom. You need the trade license of the parent company. You need to appoint a general manager, because post the MISA license, between that and the commercial registration, you want to register for the portals, open a bank account, etc., etc., and all of that needs an appointed GM. We can help with that, but we'll talk about that a little bit further down. And your first hire has to be a Saudi. Your GM doesn't have to be a Saudi, but your first hire has to be a Saudi. And depending on the type of business that you are setting up in the kingdom, the levels of Saudiization differ from 1:1 to 1:50 if you're in a factory environment. So we can assist you in understanding what the Saudiization rules are for you. Operational companies you can set up are the LLCs, traditionally branches, as long as they are exactly the same activity as the parent company in the home country. And then regional headquarters. Regional headquarters are necessary if you want to start pitching for government tenders. And you have to have operations in at least another 2 Middle East and North Africa jurisdictions. And there are certain requirements for how much of your C-suite needs to sit within the kingdom. Free zones don't really exist at the moment, but there are a number that are being talked about and a couple that are being rolled out relatively soon. So the easiest license to get is a service license. The most challenging really is a trading license. And I say challenging because a trading license requires a paid up capital of up to 30 million reals, which is about $8 million US, whereas a service license could be 50,000 as share capital. Professional licenses are possible as well. However, 25% of the shareholders need to be a trained Saudi. So if you're a doctor or a lawyer or an accountant and you're setting up those businesses, you do need a local partner. And then industrial manufacturing and real estate licenses are also possible for international companies coming in to be 100% owned. The activity is really, really important. You have to get that right. Otherwise, down the line, everything really can go left. MISA provide a full list of IC codes, and we can support you to find the right activity that matches your current license. There are some that are just not available at the moment for foreigners, medical, military, recruitment, some forms of consulting. But once again, there could be activities that you could be legitimately able to use while still conducting your business as a consultant or something like that. Minimal share cap, like I told you about, varies from 50,000 up to 30 million, and that's driven by the activities. The attestation of documents is the thing that really holds up a lot of the setup process. So what our advice would be, always get all of that ready to go, and that really does speed up the formation process. And then once you are formed and you do have a CR, commercial registration, there may be, depending on what your activity is, there may be further regulatory approvals. If you are opening a gym, you might need approvals from the Sports Council. If it's a school, the KHDA would need to get involved, etc., etc. But we, once again, post incorporation would help you achieve those regulatory approvals. Once you're set up with the MISA license, it's really important that we register you with all of the different KSA portals. That's what drives your business through the commercial registration, and then post that recruiting staff and paying their salaries and paying taxes and taking your business forward. Obviously, there's a Ministry of Labour platforms, which is the MOL platform that gets you your work permits and your license updates. Kiwa is the platform that allows you to issue expats and locals with visas, with Iramas, transferring clients or staff from one business to another. In the UAE, we have MOHRE. It's a similar thing in Saudi Arabia. It's called Kiwa. GOSI is where you have to pay your social insurance and end of service benefits, etc., for all employees, and also where you issue the contracts for local employees. Abshare is an authenticating platform that the government uses for all of the platforms around it there. Mudad is the wages protection system to ensure that you're paying your staff on time and through the right mechanisms. And it allows you to set up with your bank and then release your salaries within the right timeline. Zakat is the Islamic law, which tax in essence, which is a charity payment to the government of 2.5% of a company's net profit. And the GAST is the general authority of zakat and tax, and it allows for the uploading and then the filing of your taxes every VAT every quarter and total tax every year. So Saudi Arabia is not, as Jim mentioned earlier, it's not a zero tax environment. It's a zero income tax environment. However, there's a lot of other taxes in the kingdom. We are not tax advisors, and therefore we would really strongly recommend you get tax advice as you're coming into the kingdom. Corporation tax is 20%, withholding tax between 5 and 20%, depending on your activity. Zakat I talked about. VAT is at 15%, which I think is the highest in the region, but it has a 300,000 Riyal threshold before you start paying the VAT. Real estate transaction hold a 5% tax. Excise on certain goods and activities is relatively high, and custom tax has some exemptions around the GCC, but it can be anything from 0 to 20%. Now, we can help you file your VAT and all of your tax requirements, but in terms of advice of how you set up and your structure for tax in the kingdom, we recommend you take advice during your setup process. And then as your company is set up, there's a whole slew of different processes and requirements for you. As I mentioned earlier, between the setup of your MISA license and your commercial registration, it's really important that you have a general manager in place. A lot of the time, companies haven't identified that person yet, or maybe want to recruit them locally. And so we can offer interim GM services for a fixed period of time that allow you to complete the CR process, open a bank account, set up with all the portals, all the things that you want to be up, ready, and waste no more time as soon as your GM is on the ground. And then when they start, we do all the switching over so that we come off the paperwork and whoever the GM is, go on to the paperwork. So that's something that we can really help you with during the setup process. Obviously, MISA license needs to be set up and then renewed every year. We can act as your local signatory on the ground and be a partner on the ground for you for a lot of the portals, including tax, as I mentioned, including Mudad for the WPS payments, etc. We work with you right through to setting up your commercial registration, and then we can help renew that every year. And then your GOSI payments every year, which are the deductions for the Social Security. We can help you with that as well. With KSA nationals, it being 11.75% of their salary and expats 2% of their salary. Also, you have to file quarterly VAT, and you have to file corporation tax or corporate tax, quarterly as well. Zakat is annually at 2.5% of net profit. You need to do monthly management accounts and bookkeeping as well as an annual audit. And we have a whole team of people that can help and support you through that process as well. So setting up in Saudi Arabia, biggest market, youngest market, significant GDP, and it's where the world is currently focused. But you need to be set up properly, and we can help you through that process and post incorporation as well. I think we're moving on now to Anas to talk a bit about Bahrain.
Thank you, Nazar. Hi, everyone. My name is Anas. I am the sales director in Bahrain Sovereign Office. Basically, Bahrain is still the only country in GCC that we are still enjoying zero corporate tax. There is no tax of any kind for small and medium businesses. The only taxes implemented was for multinational companies that are making more than 750 million euros worldwide. This is the only sector that can pay tax in Bahrain. Other than that, everything and everyone is still enjoying the zero tax jurisdiction. For that, Bahrain company can work as a holding company, can act as a headquarter, also can be used as an SPV or as an SPV, but it's an onshore. Bahrain doesn't have a free zone. The whole country, the whole business setup in Bahrain considered to be a big free zone because more than 95% of the business sectors are allowed for 100% foreign ownership. Only trading required to have a local Bahraini with you. Other than that, everything is 100% foreign ownership. Setting up a company in Bahrain will guarantee you to have a corporate bank account and a residency permit. Every company in Bahrain must have a bank account. If there is no bank account, the company incorporation will not be completed, as you have to open the account, deposit 5,000 BD at least as company capital. It can be higher or lower, but you must pay a paid up capital for the company setup. Being in Bahrain, you can enjoy double tax treaties with so many jurisdictions around the world. You only get to pay 10% VAT. However, if your client is out of the country and your suppliers are also out of the country, so you get to save that 10% VAT. Next. Setting up a company in Bahrain is very straightforward. We divide it into 3 stages to make it even easier. First stage is the CID approval, or to have a security clearance, let's say, before the investor comes to Bahrain and start investing and spend money left and right. You get to know if your investment will be approved at the end of that. So we apply for a CID approval. This stage can take up like 10 days, 2 weeks maximum. Once the investor is approved, we will issue a certificate of incorporation. This will this will reserve the company name with the company number. It will not allow you to do business, but it will allow you to start hiring, start signing contracts, and to move to the next stage. Next stage is the incorporation stage, where we get to activate the license, where we will allow you to do business. It will take approximately 15 days to 3 weeks. However, there is additional 15 days to open the bank account, because once we complete all the licenses, we need to open the bank account to deposit the capital. During the setup as well, we need to rent out a commercial address, as every company in Bahrain must have a commercial address as long as the company is active. Without a commercial address, the company might be blocked or it will have a violation. The address shouldn't be like a huge office. A virtual office or an incubator would work. During the incorporation, as I explained, we will open the bank account. The capital we usually recommend to have 5,000 BD, which is approximately $13,000. It can be higher or it can be lower, but for bank process to accept the application, we always recommend to have at least 5,000 BD. Once that is done and completed, the company will be ready and active to operate and start doing business. This will lead us to stage 3, where we can start working on the residency permit for the investor or for the directors or for the employees and their families. We will help you with that after the incorporation. Also, we can continue with you throughout your journey in Bahrain. We will take care of the company, pay all the monthly bills on your behalf. We can act as a back office. Let's say if you are a small company or you don't want to hire people in Bahrain, we can provide all BRO services to the company, to the staff, to their families as well. With this, we can also apply for golden visas. There are a couple of categories. One of them is to buy a property worth of $500,000 approximately. Next slide, please. If you are not willing to actually practice business in Bahrain, if you are not interested in Bahraini market, but you want to enjoy zero tax regime, these are the activities that we usually recommend for the client. Holding activities is 100% allowed for foreigners, management consultancy, commodity brokerage which allow you to trade internationally. You can buy from X to Z as long as both of them are out of the country. This is 100% allowed for foreign ownership. Also, Bahrain can allow you to have the activities of head offices, for example. So can allow you to have your headquarter here. Bahrain is very famous with fintech, for example. The regulation and the standards here are very high. We managed to attract Binance, for example, to Bahrain. Crypto.com is registered in Bahrain. It's the platform. They're enjoying the zero tax in Bahrain. Also, factories is allowed 100% for foreign ownership. They can set up the factory in Bahrain. Saudi Arabia is 10 minutes away through the causeway. You can enjoy the zero tax regime in Bahrain while you can work with the world as well. Sovereign Business Hub is our business incubator where we provide addresses or commercial addresses to our client during the setup process, as it's obligatory to have a commercial address in Bahrain. Within the Business Hub, we will provide all the support needed for the startups. We will take care of the process during the setup. They get to enjoy the co-working space. The address will be in one of these desks. They get to use all the facilities of the office. We have like fully equipped meeting rooms, silent room, IT support. Also, they get to have an access card that they can use the office 24/7 during holidays or after working hours as well. Everything, all the facilities within the incubator are free of charge. Once the annual rent is paid, you get to use all the facilities of the office. Also, we will provide training for the startups, sales training, marketing training, finance training, so we can have them on the track to start their journey. And that's it.
Thanks, Anas. Some compelling reasons to choose Bahrain there. Moving on to the UAE, we've touched on some of this. I'll whisk through it. So obviously a very tax-friendly environment as well, maybe not as beneficial as Bahrain. And recently at 9%, largely around doing business in the mainland. The free zones themselves have tax exemptions, tax holidays, but again, there are certain requirements for example, you cannot do more than 5%, I think, of your business in the mainland. So if those free zone companies are doing business with mainland clients, that can lead to a triggering of the corporate tax anyway. Again, take some tax advice when you're looking at these questions. VAT is at 5%. There is a threshold of turnover for that, but most companies register for VAT. There's a voluntary threshold and then a mandatory threshold. The UAE has very robust infrastructure, has been more established, I would say, in terms of lifestyle, infrastructure, transport. There are over 50 different free zones. They pioneered the kind of concept of free zone, and now there are, I think there might even be over 60 now, specializing in particular sectors and obviously particular areas. There are those logistics gated free zones around the ports and the airports, but also sector-specific free zones, as well as the financial free zones with common law jurisdiction, ADGM and DIFC, which is very useful for structuring, holding companies, wealth managements, the concepts of foundations, as well as financial services, virtual assets, and other interesting developments in those particular zones. So a lot of really good infrastructure around the UAE, and hence why it's become so popular. There's been a lot of incentives recently around the UAE. It's become a lot cheaper to set up. There used to be a requirement to have a 51% local partner. That kind of fell away a couple of years ago, and now it's largely 100% ownership across the board, including in the mainland. They've now brought in certain areas for certain activities. You don't need an office space. You don't need a physical office space in the early stages, the first year or two, with a lower level of staff. So again, that's a big cost saving. Previously, you used to have to rent a physical space. Certain activities will require a certain type of space, obviously industrial, medical, physical restaurants, and food and beverage, hotels, that kind of stuff will need those physical, particularly configured spaces. But for the more generic activities, there is an opportunity to go with a virtual office to keep costs down, and government fees and licensing fees across the board have come down, particularly in Abu Dhabi, by the way. Recently, there's been a big cut and a big push by the Abu Dhabi government to drive business to Abu Dhabi to make it a more business-friendly environment. So that's been a very interesting development. The long-term goal really of the UAE is to diversify away from oil and gas. It's achieving that largely already, building a very safe and stable economy. There are many more residency options now, particularly with the golden visa regime that was brought in. A lot of executives, business owners, investors are now getting a longer term 10-year golden visa, which allows them to get their family a golden visa, which gives much more stability. In the past, your visa was tied to your employment. Now you very much can kind of have your own residency piece, and then gives you a little bit more stability and visibility. Well, for individuals, the work remote visa is another interesting one that's just been launched, and it's very working for a company in another country can come and live and reside in the UAE on a longer term basis. There's also freelancer licenses and smaller kind of SME incubator type licenses in some of the free zones and in the mainland as well. So really trying to encourage that smaller SME ecosystem around, particularly around some of the tech activities. So mainland versus free zone used to be a big question, partly because of this foreign ownership requirement, the 51% local partner requirement. That's no longer in place, so there's less of a divide. And the UAE government really has taken the view of using the corporate tax to kind of differentiate between a free zone and the mainland. There are, as I said, tax exemptions in the free zone, but you can only do business in that free zone or internationally, not within the mainland UAE. If you're doing business in the mainland UAE, you can do that, particularly if you're using a service type activity, but you'll be subject to the 9% corporate tax more than likely. Activities in the mainland and the free zone are quite similar. If you're trading, importing, exporting, you're going to need to be in the mainland if you're delivering those services and products in a local market. If you're dealing with government and you're working on projects that are obviously based in the mainland, again, you're going to need a mainland setup versus a free zone setup. Also, number of employees is a consideration. In the free zones, largely office space is more of a function of the number of staff that you have by square meter, square foot, whereas in the mainland you have a lot more flexibility in terms of number of staff, particularly if those staff members are not office-based job designations. You can get a larger labor quota against a smaller office. So actually longer term, mainland tends to be cheaper for companies with larger staff numbers, which is quite an interesting development. Bank account opening now, as I think I touched on right at the start, most banks now have a substance requirement for most companies, free zone or mainland. So in the old days, you could set up a company. You didn't necessarily need to have a residency visa for the general manager or the investor. Now you pretty much do need to have that substance. You need to have the general manager with a residency visa, or the individual shareholders to have partner or investor visas. And those individuals need to have powers on the banking to ensure substance. The company needs to show that it's doing that activity. Otherwise, banking can be quite tricky. And that's across mainland and the UAE and free zones as well. So I've touched on some of these points about, yes, thanks, Bianca. Moving on to requirements. I'll whisk through this again. Both Anas and Naz went through the timelines, very similar in the UAE. The timelines, I would say, are probably a little bit shorter now in the UAE, but the big timeline, the big delay that we often see is document preparation. The UAE is not part of the Hague Convention, whereas Saudi Arabia is. So you still need to get documents attested all the way through embassies, depending on if you're using a corporate shareholder. So it's the decision-making process in terms of what you're looking to set up. Are you going to use individual shareholders, or are you branching or setting up a subsidiary from a corporate entity, in which case you're going to need to get all those corporate documents. notarized, legalized, attested through embassies and MOFA stamped and translated possibly and notarized locally if it's mainland. There is also UBO requirements post incorporation. So be aware that once you've set up, there's now an obligation to register your UBO. So getting those documents prepared as part of the formation is essential at that stage. So the first stage, get those documents drafted, get everything ready, trade name reservation, initial approval, and then it's about I would say a 2-3 week process from start to finish to get to trade license, depending on where you are mainland, depending on whether you need additional regulatory requirements. Sometimes the activity you've chosen will trigger additional requirements, which might need a particular commercial space configuration, a particular trained member of staff or general manager, for example, may be required. So that may lengthen the time, but largely you're looking at 2 to 3 weeks. We then get the general manager their visa. We register the company with Labour and Immigration. General manager visa, again, takes another 2 to 3 weeks. So the individual general manager will need to be in country for us to do that at that time. Then the office is registered as part of the formation, but it can, as I've said, you can get an exemption and use a virtual office space in the early stages before you hire staff. And then when you hire staff, the labour quota will be a consideration depending on how big your office is. So roughly that's the timeline for a UAE setup, mainland and free zone. Again, it's obviously very much depends on the type of activity and the location that you're going for. Post-incorporation, just touched on Labour and Immigration setup there. It's quite a big consideration. Who is going to have the powers on the Labour and Immigration file? There is a bit of a chicken and egg scenario in relation to getting your general manager with a Labour file and getting them registered on the immigration system. You can't do that without having the general manager, without having a Labour card to start with. And sometimes that can mean that that delays the process, but that's a consideration to think about. You need to register with Labour and Immigration in order to hire staff, obtain labour quota, and then you take it forward from there. Bank account opening assistance, again, it's post-incorporation once you get the CR, but really it's important to have the general manager to have the residency visa against the company and the power of attorney in order to open and operate the bank. We can help you with all that. There is that substance requirement. And often if there's a complicated corporate structure above, it will be important for you to get those documents all notarized, legalized, and attested in place prior to bank account opening, even if you haven't needed those for formation. So have a think about whether you have a complicated structure. We can help you with taking a look at that to see whether that's going to be needed for banking. Accountancy and bookkeeping, pretty essential. Obviously, corporate tax registration from the off, as soon as the company's registered, really within the first few months, you should get corporate tax registration. VAT registration is dependent on turnover, 375,000. Projected annual turnover is the threshold that it means it's mandatory to register for VAT, but most companies want to register as soon as possible. So once you get the first bit of revenue in, you would then project that to hit that target, and you would register with the FTA. Again, we can help you with all of that. Annual audit is required, and the audit needs to be submitted depending on who the regulatory body is, whether it's the DED or whether it's Department of Economic Development or whether it's the Free Zone Regulatory Authority. It's probably likely that you'll need to submit those audited accounts annually, do your annual general meeting 3 months after financial year end. Monthly payroll needs to be run. Naz talked about the wage protection system in Saudi. There's one in the UAE that has to be cleared through the labour system and through the bank. So again, it's essential to set your bank account up, essential for the employees to have a bank account. And those payments are cleared through labour, the labour department, which cross-references their salary level to make sure you're paying your staff what is on their labour contract. And that has to be done monthly. And management accounts as well need to be run generally just for general good corporate governance. HR onboarding, labour law is quite important that you make sure your employment contracts match labour law. There's a labour contract that goes to the Ministry of Labour, but you can have your separate employment contracts that cover a wider range of perhaps corporate requirements within your company. We can help you onboard staff and handle all of the kind of employment file management that's needed. There's also an end of service benefit. There's now an Emiratization requirement in certain sectors, about 20-to-1 ratio, 50-to-1 in other sectors. So there's a pensions requirement for Emirati and GCC nationals that you hire. So another consideration to think about when you talk about larger numbers of staff. Yes, so a kind of a patchwork of UAE regulations here. I won't go into all of them. 100% foreign ownership, we talked about. Most activities now 100% foreign owned. There are still some that are, critical infrastructure, some oil and gas, defense that need a local partner, manpower, labor, some visa acquisition companies, that kind of thing, still need a local part of it. But the majority in the mainland is now 100% owned. Branching is an option. You need to have the same activity as a foreign branch, and you have to register with the Ministry of Economy. Most companies that previously used a branch because they needed to in the mainland for 100% ownership, you can now set up a 100% owned subsidiary and have an LLC, which is more beneficial from a tax perspective as well. So there's not as much difference in the decision making between a branch and an LLC, but branches are possible. Corporate tax, we've talked about that. Labour and immigration, job designations, quite important there. Have a think about what kind of staff in terms of their job titles. Those qualifications will probably need to be legalized and attested, and in some cases equalized, particularly if they're in the medical field or engineering. So have a think about the mobilization and the timing of your staff. If you're looking at a project, there may be some lead time and some delays to get all of those documents ready. We can help you with that requirement, looking at what your labor quota is and what your timelines are. Some of those new visas we talked about. Actually, we've probably gone through most of this anyway. VAT, UBO registrations, annual compliance, virtual assets, some other of the new regulatory authority information is quite interesting, but we can touch on that at a later stage, and it will be available in the fact sheet. So yeah, please do carry on with the next slide, Bianca. Thank you. Moving on to Oman, just one slide on Oman. Oman tends to be, the demand for Oman that we've seen is largely around logistics and its geographical position on the peninsula. We've seen a lot of companies look at particularly the Duqm and Sohar free zone authorities of deep water ports. So a lot of logistics companies looking at Oman for that reason, and those are very good free zones in terms of speed and efficiency of setting up. We've done a lot of formations in there. Salalah further down south, less so, but still quite interesting. Companies setting up in mainland Oman, 100% ownership is now available for most activities, as with the other GCC countries, and mostly around Muscat, tourism, F&B, hotels, some construction and some oil and gas, but across the board, 100% ownership, and it's fairly easy and straightforward to set up in Oman. There is a high Omanization requirement, similar to Saudis, broadly is a 3-to-1 requirement. So the first hire has to be an Omani, and some of the job designations are heavily Omanized. So again, having a look at Oman, have a look at your activity and your requirements and what the demand is, and we'll help you with that. You're looking at the consideration and the levels of Omanization that might be needed there before you take the step in. Individual investors are able to set up companies now in Oman, and you will obtain a partner visa and an investor visa, which is a new development over the last year or so. So that's quite interesting as well. And I'll move across to Naz for Qatar.
Okay, so our final jurisdiction we want to talk about is Qatar. It is a tax-friendly environment with 5% VAT above a similar threshold as the other countries, and a 10% corporate tax level, a bit higher if you're in the oil and gas industry. And there's also free zone tax holidays of up to 20 years, and there is no income tax like the rest of the region. There's a lot of support going on at the moment for industries that align with Vision 2030 in Qatar, and 100% is 100% foreign ownership is allowed on the free land, on the mainland, in QFC, and in the free zones as well. There are 2 free zones in Qatar. There's the Qatar Science and Technology Park, and then there's also the Qatar Free Zone Authority. In both, you get 100% foreign ownership as well, but you probably have a 20-year renewable tax holiday. You get zero corporate tax, and for some domestic exported out of the free zone into the mainland, there'll be zero customs duty as well. There's been a lot of projects in Qatar over the last few years. Obviously, I had the World Cup. There's new projects in real estate, in LNG, and it continues to try and be the centre for regional sports, especially in the region. We have 4 active partners that we work with to act as nominee shareholders in any company that wishes to structure itself with the local partners. And Qatar is the first in entrepreneurship in the Arab world, and second in sort of global competitiveness in its structuring in also in the Arab world. It'd be quite interesting to do a poll on the next slide as to who feels they may benefit from having a local partner. Obviously, the regulations throughout the region now offer the opportunity for 100% ownership in a number of activities. But what we have found is in those countries, clients have generally not moved away from their local partner and have decided to continue for various reasons. On the mainland, you can provide B2B and B2C businesses and products. You can only sell B2B if you're in the free zones. 10% corporate tax, 5% withholding tax in the mainland. Obviously, retail, because it's B2C, is only available in the mainland. It's a bit faster to set up. There's a lot of investor protection in place in the government, and it's much less restrictive. And you can have an unlimited amount of contracts. In the free zones, like I say, you have 100% foreign ownership. You have these 20-year tax holidays, let's call them. You have specific office space requirements, again, based on the number of employees you have within that business. And it's the home for a lot of incubators and for a lot of accelerators. Interestingly, on the very useful for local knowledge is sort of winning in terms of keeping a local partner. Well, in Qatar, we have 4 excellent local partners, including one who's a sheikh. In QFC isn't a free zone. It's the Qatari Financial Center. You can have activities like advisory or consulting or audit, accountancy all in there. There are some tax incentives for local businesses, and it has no withholding tax, but it isn't designated as a free zone. So those, in terms of the formation and the setup, very, very similar to all the other countries we've talked about this afternoon, and including a very similar timeline to the UAE.
Great, thank you so much. Thank you to all the speakers. Just for kind of a last poll consensus on, generally how you felt about the session and if it's been able to provide you information to take it forward, if you wouldn't mind letting us know what you think that your next steps after this webinar might be. And there's definitely opportunity for you to ask questions to Anas, Jim, and Naz as we move into the Q&A, if anybody's got any additional questions about, maybe their particular circumstances or just anything that we weren't able to cover. I had said before that we will circulate the presentation and the kind of video at when we conclude. But if anyone does have any questions for the guys here speaking today, please take the opportunity to ask some questions now while we're here. And if not, feel free to reach out to myself or Miguel after the session is finished, and we can kind of address those on a one-to-one basis. Okay, well, I'm not seeing anything coming through, so I'm assuming people might just want to have a one-on-one approach, which is absolutely fine. So thank you very much, everybody, for your time. Thank you again to Naz, James, and Anas for kind of giving us an overview of the region. And we hope you guys found the session informative. Thank you so much.